Hello, I'm Natalie MacDonald and you're watching Dukascopy TV. Joining me in the studio today is Cheryl Hicks from Quadia to discuss a new sustainability index project in Istanbul. Cheryl, thank you very much for joining us today.
Thank you.
Now, before we move on to the project itself, can you give me a little bit of background on sustainability indexes and sustainable stock exchanges?
Sure. So sustainable stock exchanges is a relatively new term, and there's been sort of new momentum building around that since the Sustainable Development Conference in Rio this past June. And we'll come to that in a moment. But sustainability indexes have been around for some years now. In fact, the last 2 decades, there's been a sort of growth in sustainability index through the 90s and in particular in the 2000s, where many emerging markets have developed their own sustainability indexes. So in the early 1990s, there was the Domini Index. In 1999, the Dow Jones Sustainability Index, the FTSE for Good Index came after that. And in terms of emerging market indexes, the Johannesburg Stock Exchange developed the first emerging market index in the mid-2000s, and then the Bovespa Index from Brazil, and now another wave of emerging market indexes from Mexico to Egypt, and now our project, the development of the Sustainability Index with the Istanbul Stock Exchange in Turkey.
Now, as you mentioned, Quadia is involved in this new sustainability index in Istanbul. Can you give us a little bit more about that and exactly what its aims are?
Sure. So sustainability indexes, in general, it's believed that investors will look to sustainability indexes to find companies that are managing new risks. And this may be a relatively recent phenomenon in terms of sustainable investment and impact investing to look at these indexes. But there are many reports that are saying that companies that are managing sustainability issues are generally better managed companies and therefore are more resilient in terms of the markets. Now, in terms of the Istanbul Stock Exchange project, what the ISESI was interested in is, of course, driving more investment into Turkey, but also bringing more companies in Turkey onto into the stock exchange. And stock exchanges are also seen as a great opportunity for transparency, to set criteria for being a part of those, the exchange and the index. And this is part of the sustainability stock exchanges projects as well, are about transparency and having companies report on more issues that will give investors more insights into the management of the company.
What sort of criteria then is used to assess the companies within the index?
So sustainability indexes look at sustainability issues in addition to financials. So financials aren't excluded; they're included here. And generally, it's environmental issues, a company's management of environmental issues, their understanding of the issues where they have impact, social issues in terms of a company's license to operate in the various countries where they operate. In terms of the communities there, gender issues, equality issues, skills development, leadership. There's many issues involved in sustainability. Emerging market indexes, one of the components that investors really look at is governance, and this is certainly the case in Turkey. And Turkey has had a corporate governance index for a number of years as well, and we have seen an increase in transparency of how companies are reporting on these governance indicators. That's been integrated into the Sustainability Index project, and the companies that will be admitted into the index once it's launched imminently will have to report on governance issues, but also their environmental performance and performance in terms of promoting good social governance as well, in terms of corporate responsibility. But the other thing that maybe is unique about the Turkish project is that we've involved the companies in this dialogue. And so it's been an 18-month process of really asking the companies, what are their issues? What are their sustainability issues? How do they want to be evaluated on them? And we believe that this will bring a new dimension to sustainability indexes in involving the companies from the beginning. And so they are very aware of how they will be evaluated, and it will also help them to manage and measure the data that they will need to submit to these indexes.
Now, Turkey is considered by the IMF to be an emerging market economy, and despite slower growth in September, is considered to have had a soft landing this year. What impact investment opportunities are available in Turkey at present?
So many impact investors will be, and we define impact investing at Quadia as investment in significantly impactful companies, and we would define that as the companies that are measuring and managing their impacts, that are very aware of their impacts on the environment, socially and in terms of governance, but also the companies that see business opportunities in addressing these issues. And emerging market indexes have many more SMEs, small and medium-sized businesses, than the multinational businesses on the Dow Jones Sustainability Index or FTSE for Good. So in that case, as impact investors, that would be very interesting for the indexes to already be doing some of that due diligence for us in selecting the companies for the index that already meet these criteria for sustainability that we also are looking for.
Now, we ended there on investment, and that does bring us round to the Dukascopy question, whereby we ask our guests if they had $1 million to invest for 1 year, where would they place it? So if we take a look at the chart, you can see your choices. We've got real estate, equity, bonds, gold, cash and oil. So $1 million for 1 year. Cheryl, where would you place it?
Hands down, Natalie, I would say equity.
You go equity? Okay.
With a caveat of private equity in significantly impactful companies.
Cheryl, thank you very much, and thank you for your comments.
Thank you.
We'll be back shortly with more exclusive interviews. For now, though, goodbye.